Hello, investors, traders, observers. I want to go through some technical analysis. Hopefully, I can help some people about entry points. Do you know? First thing I want to say is you have a lot of people that make their living off of YouTube. I don't. I don't. I just make videos. This is sort of a hobby, and I've been doing it 5 years. I sought help from a group called the Chart Guys, Charting Man Dan. I don't think there's anyone smarter with technical analysis out there as far as trading, entry points, getting out, keeping profits, things like that. But you got these young guys out here that just tell you buy, 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 and then they say, oh, a disclaimer, I'm not your advisor. But you can get into the habit of listening to someone and doing the wrong thing even though they have good intentions, okay? So having said that, I'm hoping that maybe you can save a little bit of money and a little bit of heartache by trying to understand levels, okay? My number one level to look at is, okay, look at the chart here. This is the daily chart, right? I will not buy a stock this far away from the 20-day. I have my chart set up to show the 20-day, the 13, and the 50. If it's, and I'm going to show you NIO and why I think NIO right now is a good entry, but it's risky, okay? Now this is CRISPR Therapeutics. It's a very good company. Genomics, you know, it's ARK investment, and you had guys telling you to buy it when it was here. Okay? Is it safe to buy it here? Well, I guess if you're going to wait on it. Well, what if something happens? Something, bad news, whatever, and then it drops below the 20-day down here to, let's say, 145 or even 148. And you went in all hands. You bought 50, 100 shares. Well, you'd be in a lot of trouble right now and you'd be worried a little bit. Now, full disclosure, I only have 2 shares of CRISPR. And why is that? Because sometimes what I'll do is I'll put an order out there for what I want it for. And I had an order out there, 1 share on my hobby account, my Robinhood account, for $148. And somehow I caught a bid. Where did I catch it? I don't know. It must have been after hours somewhere or something. I don't know. So I was happy, you know. Within a short period of time, I was up by 25 bucks. So today, I figure it was safe to get it. I might have bought 1 more share at 68, okay? Because I'm not seriously investing in CRISPR. I'm trading it. Now, if this thing goes all the way down, there's something called risk reward, right? If it goes back down to this 20-day, see down here, that's way down here, like at 148. By the time this goes down to the 20-day, the way it's acting, it'll probably be 150, okay? So I wanted to show you the level. I want to show you a little bit of history, how it stayed at the 20-day moving average. To me, that's a strong stock, right? It's even kind of strong if it was staying at the 50-day down here, the brown line. And I keep the this polka dot line, that's my 13-day. That's for me. I'm not going to get into that. But during the trading day, what day traders do is they look at the VWAP. Okay? So if you were looking at CRISPR today and you went long, you would have been breaking all the rules. Why? Because my VWAP, what color is it? It's sort of brownish orange. Anything below the VWAP means you don't have the support to buy it. The algorithm will kick in and try to make you lose your position. Okay? Now, these guys that do the fundamentals, they look at these companies, they like them, and they hype it up. Buy NIO. There's one that yesterday, I'm going to show you NIO. After his YouTube channel, the headline is, buy NIO, buy NIO. You would be $2 under right now. And what if you bought $500, 500 shares of NIO? $2 is a lot. You'd be down pretty big, right? That's the other thing that I would advise. Scale in. The algos, the big money accounts, they got computers, algos, and they know when to take you out of your position. Okay, FUBO, another popular one. Okay, I see the one young guy, handsome guy. He knows how to do his fundamentals, and he just basically they make money off of YouTube. So why would they talk about FUBO? Because it's trending, and more people are going to go to their channel. And they're going to make more money. However, I've been in FUBO as a trade. I started buying FUBO way back here. Way back here. Let me show you. I don't even know. I really don't, to be honest with you. Let's see. What is this? In October, I was just using as a hobby. I was buying a few shares. It was still above the 20-day. Look. Above the 20-day. When it broke the 20-day, like right here, maybe October 15th, I was testing the waters. I was buying a few shares. I was phasing in, and then I watched the levels. If my position stays green, yet I'm not looking at a chart, and they come close to where I'm at, and I'm happy with the stock, I'll add to my position. But jumping all in, no, I don't do that. I do it for day trades. That's another subject. We're talking about investing. So there was a young guy out there, put out a video, and he said he was thinking of buying FUBO, and he was back here. Let me show you something else about charts. This here, there was a small gap here between December 21st and December 22nd. I'm in. My position is secure, okay? Because I'm in it for the long I'm up like $300, something like that. I won't lose on this trade. If they decide to dump this thing, I'm getting out before I go in the red. I don't think that's what they're out to do. Why? Number one, this small gap, it wasn't a big one. It needed to be filled. So yesterday, I should have put out a video. I don't know if I did. But yesterday, my thinking was they didn't come down far enough. They still have to fill the gap between these 2 days. I'm not going to get into that because I got a lot of stocks to look at, but the gaps almost always get filled. They ran this up, but I want you to look at the 20-day. See the 20-day? Look how far away from the 20-day they were here on the 22nd. I knew this was going to retrace. I knew it. Just like AI. I'm going to show you AI as well. Okay? So FUBO, I believe it's still relatively safe. Are they satisfied? I kind of think they might be, right? They could bring this down a little more, maybe around 40, 41. Why? Because they're very far away from the 20-day. And they're looking for a trading level, right? The big money guys got in way back here. They got all kind of leverage, and they know the day traders are out there to scalp and make money. So they're fine with them doing that, sure, as long as they're not taking their money, right? So I think they're looking for another range. It's down right now after hours at around $44. Okay? My thinking, I could be right or wrong or whatever, is that they're looking to maybe push it down to 41, 42, shake out some more people, and then start trading it at a range. Maybe you could put a trend line. I got a lot of things running on this computer. Between this level and this level, just for a quick idea here, and maybe the big accounts will start trading in this level, right, and accumulate shares again, buy and sell, using their algorithms, of course, before they go up to another level on what I call a permanent basis, right? This is a sports channel that you can pay for. So it's along the lines of, say Netflix and Disney, except they're looking to get sports contracts. And they're looking for paid subscribers to make money. So somebody sees a lot of benefit in that. Peloton. Here's another one. It trends. People come out, they tell you how wonderful the company is and you should buy Peloton, right? Well, guess what? If you'd have bought it at the high of the day on the 23rd, you would have paid almost $30. And look at what it is today. Right now, it's 27. Now, if you scale in, I guess that's not really a problem. I don't like it here. I do not like it here. This is not, look, it's a good company. It's up and coming, let's say. It's futuristic. It's got a future. And that's what a lot of people invest in, particularly ARK Investment, right? They invest in AI and genomics. And my favorite ETF is ARK F, which is a fintech company, right? They're heavily invested in PayPal. I almost got back in. I didn't like the entry. If I'd have got in at, and it's away from the 20-day, right? I'm looking for it to come down. If the market ever crashes, I will hopefully be totally out, and I will look to get ARK F, ARKF, at the cheapest price possible. And if it holds the right level at the right time for me, I may just buy it with all I have as a long-term retirement fund. Okay, so that's where I'm looking at. So what's my problem with PLTR? From what I've told you. This is the daily. I look at the daily. This was just a sideways day for the market. All right? There's some problems with the stimulus, and I'm not going to get into politics, but it's stalled. Okay? I'm not going to talk about why, and you should believe this, and you should believe that. This is about stocks. I thought about getting into Peloton today at the low of the day. I kind of wish I'd have bought just a small position at this level here, 27.52. But when they do this to a stock and it's above the 20-day, what do you think they do sometimes? At the opening, say on Monday, they may what do they call it? They don't call it restructure, but people restructure their accounts or whatever. They look for another level. They jump out on a downturn, right? And look at down here. This is called the RSI, Relative Strength Index. It's pretty high, okay? So for the first 30 minutes of the day, I could see big investors causing this thing to drop down to the 20-day around 25 bucks. If they do that, I'm going to buy a big position and set a stop loss. My hope would be that it goes up, but I would take a loss if it didn't, not to stay in, because my 20-day exponential moving average is my rule. That's my rule. And on the 5-minute chart, during the day, after that big push in the morning where they dump or they rise, I look from then on, I look for the VWAP. Okay? It's another subject. So, everybody's saying, buy Peloton, buy Peloton. These young guys, they don't put a chart up for you to look at. So, for your own good, look at the charts. Do you know what the number one reason why people buy stocks? It's something very common. It's called FOMO. I'm afraid I'm going to miss out. And I go in and I buy at the high, and all of a sudden I'm stuck. And if they don't keep riding up, okay, so there's your Palantir. Did I say Peloton? I'm sorry, Palantir. I like it at the 20-day. I like to see it retrace. It's not a big profit company, okay? I was in here when it was doing all the stuff here. I made money off of this. I was trading it with a tech stock called, it's a PERI. And I look at that stock. When that stock comes down to the 20-day, I might jump in. You don't have to buy. You can look for the right time to buy, especially if you're looking to buy into the future. So here's NIO. Yesterday, one of these young guys with a big YouTube channel is all, and they do all this, and they tell you to buy, and NIO is this, and NIO is that, and this is what happened. Well, guess what? Alibaba is being investigated by the Chinese government, and it put weight on all the Chinese stocks. However, NIO held the 20-day, right? It held the 20-day exponential moving average on the daily chart. And I am tempted, I don't know if the after hours is still open, I'm tempted to take a position in NIO. All right? I'm tempted to take a position. Why? It's resting on the 20-day. It didn't break through the 20-day. But I wouldn't be buying it up here, right? I'd be in a good position. And yes, it is a good company, I agree. I was telling people to worry when it was over here because it was indecisive. That's called an indecisive candle. The next day, I was worried the candle was thin in the morning, and the same day, I changed my prospectus because it formed a hammer on the candle. Those are other things you might want to look into, is candles. This is an impressive candle. These three are not. It's a downtrend. But I think it's just a retracement. And like I said, it's not advice. You are responsible for your money. I like this level. If it goes up, I would get out. If I bought it, I would have some safety, especially if I bought it on the day, in the day. Not stop losses, if I'm not mistaken, only work during day trading. So that's NIO. Why was I showing you NIO? I'm showing you levels, and I'm trying to tell you that you're looking at these videos on YouTube and you're getting in. If you're scaling in, it's not such a big problem, right? Because you're doing what they do with 401ks, right? You're buying at different levels, and it all evens out at the end. unless the market crashes. Okay? If the market crashes, we got all new levels for everything. That's the other thing. Maybe I'll show you SPY. You should be looking at the market, the overall market, when you are buying stock, because it's rare that any stock is a unicorn during a downturn of the market. Okay? So like you see what happened today. Everything gained a retrace today. This is Crispus. I think I showed you CRISPR already, didn't I? So why am I back here? It's too far away from the 20-day. I got fortunate. If I see this thing retrace, if they find a good reason to dump this thing and it goes down to the 20-day, I'm going to buy it. Okay, but I think I covered this one. I did cover it. Well, that's all the stocks. So let me show you the SPY real quick. So I got everything running on this computer, so it's running slow. Maybe we won't. There we go. There's CRISPR. Zoom. What happened to Zoom today? Let me show you something. Look how far below the 20-day. And you got people out there saying, oh, this is a deal. This is a deal, right? Because Zoom was $481. Zoom is going down. What? Oh, look, I had Zoom. I'm looking at this level here at Zoom. Why? Because of what happened back here. It's a long story, and we're not into that today on this video. But on the daily, this looks terrible. Although you could make the argument that this is a level. A level. And it could bounce off of this level. But during the day, you could see this was going to go down, and anybody that bought it was disappointed. Veritone. Why did I get out of Veritone? Because, okay, one of the things, the all-time high can be a magnet to bring a stock up. Okay? That's another thing I didn't cover here. So, could it? It could. If it comes back down to the 20-day, I'm going to buy a nice position in Veritone. So I want to show you another tactic that's used. It's called a gap fill. I looked at this name back here. If I'd have seen it here after it dropped like a brick, what I did was I went out. Right? I was just looking at this. I caught it on a scanner at, I forget what the scan was, but look at the level here. This is back in March of 2020. This is risky, but people do this. Back here in 09/25, 2020, it rode up, caught the 20-day, didn't hold the 20-day, and dropped back down to this level. That's why I made that line. So, but here's the other thing that's the bigger issue. Here's a gap between this day and this day. You see the gap between these two candles? Look at these days. None of these candles filled this gap. So the 80-20 rule, I call it the 80-20 rule, is if you want to buy this, it's only $2. Let's say it was $2.50 when I bought it. If it doesn't go up and I get caught and I lose a few bucks, okay, right? It's a risk. All trading is a risk. If it fills the gap and I only made 50 bucks on a small thing. Oh, here's the other thing. If it gets to this gap, fills this gap here, right? Gets up to this level, and it's over the 20-day. Oftentimes, that causes a stock to accelerate to the upside. And then I'll get out with maybe a bigger profit. But this was just a play for myself. with some things that I've learned about gap fills, and I could afford a little bit of side money to play it out. Not a paper trade either. So that's another thing that you would look at. There's other stocks that I could have looked at that these guys are telling you to buy out there. Okay? Riot. Blockchain. Oh, and after all, Kathy Wood is invested in this. And they told you to buy Riot over here. It was almost $15. But they didn't tell you how far away from the 20-day it was. That's my point. Okay? It's now what's the idea with this? I think it's a SPAC. It's a blockchain. Okay? It has to do with crypto mining, I believe. Something like that. Okay? And because it's in that area of fintech, I would guess, and crypto, and Kathy Wood and ARK Investment, they're like, you know what, this looks like a future thing, so we're investing in it. Well, when everybody heard that they were investing in it, say back here, they jumped aboard, right? They jumped aboard and pushed the stock up, and then the poor guys like you and me, we bought it up here. I didn't. I don't know. I think I am in Riot, but yeah, I might have got out of Riot today. I did. I got out of Riot today. I want it closer to the 20-day. So I'll wait for a bad day in the market. You're going to have bad days in the market, okay? What is it called? Restructuring, repositioning. They like... Look, they got computers. They know what's going on. Nobody's blindsided with the big money accounts. They're not blindsided at all. When you see a market correction, basically they're saying, we're too high, we want to go lower, and then they buy lower. And if you're staying in the market when they do that, your money's on hold. The 401k crowd, they got to watch their account go up and down, up and down, up and down, right? Hopefully someday I'll be smart enough to know how to be out when I should be all the way out and in when I need to be all the way in. Here's one that I wanted. This is a brand new IPO. What's the problem with going by the 20-day? Here's the problem. It's new. It hasn't established a level yet. I like Upstart, and I think this is a SPAC, actually. I'd have to look into it. Look into your fundamentals. Listen to the guys on the fundamentals. Look for levels. I put this level here. I think I went out to the 15-minute, or I was looking to get in. I like to see on a really bad day, this go down to the 13 exponential moving average. For me, I would start phasing in at 35. If this ever dumps to 35, I'm going to start buying it. Okay, I guess I made the video long enough. I just want to stress, you have to watch SPY and you have to watch the NASDAQ if you're trading. Don't jump in because a stock is moving fast to the upside. It could be a pump and dump. That's what I wanted to show you, was one of these stocks. It was a SPAC. And Jim Cramer pumped it up for his friends. And a bunch of people jumped in. And today they're losing their shirt. It went up to $34. Today it went down to $29. That's a lot of money for a poor guy. You know, let's say somebody that has an account with $30,000 and now they're watching it red and they're worried they're gonna get pushed down below 25,000, and now they don't meet the criteria of the pattern day trader. So you can't go by the noise. You can't go by the hype. You got to control your FOMO, control your heart, look for levels, and trade wisely, and don't get involved in that FOMO. these young guys look, and they're fast on the chart, and look at this level here, and look at this, and I got a trend line here, and this and that. Guess what? This 20-day, that's not a trend line. Guess who made that 20-day level? The 20-day exponential moving average. And this level here, the 50-day exponential moving average. The traders made those levels. Nobody drew a line. That's a moving average. Okay? Some day traders, they go by the 5-minute chart. And I don't like the 5-minute. That's why it's not on my chart. But let's just go by the 13. Let's say you trade off the 13. Right? So you say, look, they got it over the 13 and it's in an uptrend and I got heavy volume. Not only do I have heavy volume, but the RSI isn't overextended, and they'll jump in a trade, throw a lot of money at it, put a stop loss, and then make, even if they make $100, they just made $100 in 5 minutes. That's how it's done. They know what they're doing. They don't buy it because somebody searched out the fundamentals for them. Okay? I took enough of your time. I hope I didn't bore you. I hope I'm not offensive to anyone. But when I first started trading 5 years ago, I watched a lot of YouTube videos. And there's a lot of people out there that are making money off of YouTube. And they're saying stuff. Sure, they cover their own butt. But they say, I'm not your financial advisor, so search it out for yourself. But yet on the title of their YouTube, it says, buy NIO, here is why. And then they put a disclaimer. And you see that, and it puts a subliminal in your brain, and you buy NIO at $48, but today it went down to 44 or something. Okay, so I'm trying to help as many people as I can. I don't make money off of YouTube or these videos. I just have a passion for it, and I love it. And my plan is to, I'm retired, to stay retired, but to have an income from it. That and flipping homes, okay? So thank you. God bless. Merry Christmas.